Hello Mavericks, this is Imri and welcome to today's currency recap. It is May 9th. So today we'll be doing a review of the trading day. We'll be taking a look at any meaningful news and looking at the broader equity and commodity markets. We'll be doing some technical analysis on the major indices, examining our currency baskets, and looking at any major news reports to close out the week. And then we're going to end things off by looking at some potential setups in the currency markets. Let's get right to it. In this currency recap, we will be using some advanced technical analysis. We believe technical analysis is the fundamental skill of every profitable Forex and crypto trader. Maverick Currencies is currently hiring serious technical traders for a trader position. Traders will trade firm capital and keep 70 to 80% of profits generated. If you are a technical trader with a technically based trading system, we want to meet you. So please click the application link in the description below this video. Let's break down today's market action. So starting things off with some market analysis. All right, so today, unemployment claims came in slightly higher than expected, but we're still seeing general risk on appetite. So when we're taking a look at the broader markets here outside of currencies, we can see that stocks had a good day today. The total stock, the S&P 500 up just over 0.5%. Crypto was up big today, and gold and oil up as well. So we're generally seeing that risk on appetite come back into the markets. As far as the currencies go, that similar theme has been reflected here as well, where we see the commodity currencies leading the way, particularly the Aussie and Kiwi dollars. The European currencies pretty much flat on the day, and then the two biggest losers were the yen and the US dollar. As far as cryptocurrencies go, really good day here. Bitcoin and Ethereum leading the way, but Bitcoin Cash and Litecoin up each today as well, and a number of altcoins were up across the board as well. And then when we're taking a look at our market outlook, we're back to a +2, folks. So we're now above both moving averages, but the slope of those moving averages has not yet turned positive. So we can see that in this chart of the S&P 500. Is this the march to reclaim new all-time highs? It's a little bit too soon to see, but the indications so far are quite positive. And then taking a look at our news economic calendar here to close out the week. Tomorrow we're going to get some GDP data out of the UK, and we're going to get some employment data out of Canada and some consumer sentiment out of the US. So I would say of those numbers, of those things to look out for would be the news coming out of the UK early in the morning, and then out of Canada as that New York session opens up. Taking a look now at some currency analysis. We're going to examine our velocity score here. Crypto doing really, really well, particularly Bitcoin, Ethereum, and Litecoin. Aussie and Kiwi dollars also doing very well from a velocity standpoint. We probably want to avoid the loonie, the euro, and the Swissy. And unless you're going to be awake to trade the volatility from those GDP numbers coming out of the UK, you might want to avoid the pound as well. So if you are in any pound trades heading into that news event, just keep in mind that there will be some volatility. As far as negative velocity goes, we have the yen slightly negative there at a -1, and the US dollar at a -3. So with that in mind, let's jump over to TradingView now and take a look at what's going on. And we're going to kick things off with the Japanese yen. So I think the yen is best avoided for now. We had a very clear three-wave movement to the upside. Now, in LU wave terms, that could be an ABC, and that might mean we have new lows yet to go. However, with the specter of possible intervention being raised now on behalf of the Bank of Japan, and the fact that we're trading in this cluster of previous orders, I think short yen trades right this second are a little bit difficult. On the other hand, I think buying the yen is also very difficult. So I'm personally staying out of the yen for the time being, and we'll have to wait to see whether prices do treat this area as legitimate support or if we break below it. If we break below it, then I think short yen trades are back on. As far as the dollar goes, it's looking like you can see this moving average here is the 50-period moving average, and we basically stalled against it. So now remains to be seen whether we're going to trade back to this trend line that might act as support, or if we're going to break that trend line. If we break the trend line as support, there might be some opportunities to continue shorting the dollar. That would be, in my opinion, the better move for traders. You know, if I had to pick which way the dollar is going to go, I'd rather the dollar go down. I think that's an easier trade than buying dollar strength. Okay, the Swissy, absolutely to be left alone. It's just been trading sideways in this area of support that I've called out for a couple of weeks now. The euro, so we traded back down to this trend line, which I called out last week, and we've treated it as support. Remains to be seen now whether we can break through these highs or if we're going to stall in this resistance zone one more and take one more crack at that trend line. But I don't have much interest in trading the euro, and the same thing applies to the pound. We just bounced from support to resistance, and it looks like we're now drifting back towards support. As far as the loonie is concerned, that currency has played out exactly as expected. We got this move back to the support line and we're consolidating. It looks to me like we want to break that support line. We might get that break below with tomorrow's employment news serving as the catalyst. The Aussie dollar remains quite bullish, and I think we're taking a run, you know, at these highs right now, these highs from June 2023. So I'm bullish the Aussie dollar. And the New Zealand dollar loves creating these little inverse head and shoulders patterns. So we had one back here, which broke out in November of 2023. And we have another one right now, which broke out fairly recently on May 8th. So just yesterday. Now, I think this head and shoulders pattern is big enough. It should be able to take us all the way back to these prior highs here from February of this year. So that would be the optimal trade. It's possible that we stall against this resistance point from March 8th, however. So just keep that in mind. So I think we have some runway to be long the commodity currencies, well, the Aussie and Kiwi dollars specifically here. All right, Mavericks, that wraps things up for this currency recap. Please stick around for next week's recap. It's going to be pretty interesting. I suspect the market will have shifted, and we're going to see some currency volatility come back into the markets fairly soon. Until then, as always, ensure you're playing relative strength and weakness, following proper position sizing, and following your trading plan to the letter. That's it for me. See you guys soon. Bye for now.